Welcome to today's webinar from The Energist. Today we've got experts from Drax and Pexapark pulling back the curtain on corporate power purchase agreements. Every time we write about CPPAs or PPAs, we get a huge amount of hits. There's a real interest in them. And although the market is growing quite substantially, it's still a huge amount of people are not engaging with them through perceived complexity. I mean, they sound good. Buyers get green energy. It's important for net zero targets, CSR, hedging against price and volume volatility. And asset owners get to use the PPA to increase the bankability of the project, allowing finance, particularly as subsidies for renewable energy start to cease. Power purchase agreements mean many different things to different people. I mean, they're used for brown as well as green electricity. They can be sleeved, physical, virtual, on-site, corporate, retail and utility, to name just some of the structures. And so it can seem overwhelming, but today we're trying to reveal some of the truths around the challenges and what are the emerging opportunities on how to lock in clean power. I'm joined today by Victoria Santos from Pexapark, and she'll be speaking later. And first I'm going to hand over to Callum O'Reilly, Renewables Origination Manager at Drax. Callum.
Hi everyone, thanks so much for joining the webinar today. I'm Callum. I'm the Renewable Strategic Originator at Drax, and I focus on facilitating CPPA arrangements for our customers. Amongst other things, I'm also involved in facilitating route to market arrangements for our larger scale generators. So I'm joined today by Victoria from Pexapark, which is actually quite cool. For those of you who don't know, Drax and Pexapark recently started a working relationship whereby we'll leverage each other's skill sets. And in Drax's case, in particular, we'll be using their market intelligence to better inform and support our customer base. So I think we're in for an interesting conversation today. I think having both Pexapark and Drax on the call is going to provide for a good mix of insights. I think Pexapark is going to be able to provide a really well-rounded data-orientated approach into the PPA market. And from Drax's perspective, as a licensed electricity supplier within the UK, we're very active in the PPA market. We recently facilitated and closed a PPA 2 months ago. We're facilitating another 6 transactions this year, which should close in the next 2 months. So hopefully we can bring that practical industry insight and just I think highlight some of our experience within the UK PPA market. So just a bit of an introduction on CPPAs, because you never quite know where various parts of the audience are. Just to make sure we're all on the same page, we'll start right in the beginning with what is a CPPA. Just waiting for my slide to change. Apologies. Chloe, you might need to change the slide. There we go. So a CPPA is a corporate power purchase agreement. This is essentially an energy contract that connects and links the power your organization consumes to a known renewable source. And it's really that element of traceability which has supported the demand and growth for this type of transaction. So generally speaking, this is a power contract between a corporate consumer or a corporate buyer and a renewable energy generator or seller. Generally speaking, these are long-term fixed price energy contracts. So just kind of giving a kind of a broad overview of what are some of the benefits and challenges, I think it's quite interesting. So we started to receive quite a significant growth in demand from our customer base, particularly our larger I&C customers who are looking to incorporate CPPAs into their overall energy mix. And I think the main reasons for that are primarily twofold. So first and foremost, as part of your CPPA, you get REGOs, which come with that transaction, and that obviously proves that the power your organization is consuming can be traced to a specific renewable source, right? So it's obviously quite a useful tool that organizations can use to support their ESG commitments. I think second to that is that CPPAs tend to provide a natural hedge against the wholesale electricity market. And we found this to be particularly true during periods of market volatility, such as during the Ukrainian invasion or COVID-19, when there were surges or spikes in demand for these types of transaction. I think I just highlighted the value in how CPPAs were able to offset some of that exposure to the wholesale electricity market. That's not to say that corporate PPAs are not without the challenges. I think anybody who's ever done one of these transactions or ever tried to facilitate a CPPA knows that they are notoriously difficult. I think in and of itself, CPPAs tend to be quite a tricky type of energy transaction because they're quite unique. So corporate PPAs tend to look a little bit different depending on who the generator is and who the corporate is. And because of that, you know, negotiations can take anywhere from 2 to 12 months, right? So there's quite a significant amount of both legal and commercial resource which needs to be invested in order to get one of these transactions across the line. And that's obviously quite different to, I think, what corporates are typically more used to or comfortable with in their standard retail supply agreement. So there's a level of adjustment there. I say that with a bit of a caveat because I think corporate PPAs today look quite a bit different as to what they did 3 or 5 years ago. And I think they are becoming more standardized, and I think it's a sign of market maturity. And I'll touch on a little bit of those reasons later on as to why, you know, I think standardization is starting to be built into these contracts. I think if we had to draw out two of the main difficulties that corporate PPAs have been facing over recent years, and kind of just starting from a more longer term perspective, at least over the past kind of 3 or 5 years, I think one of the, at least kind of my experience in negotiating these types of transactions, one of the most difficult components has been COD risk. So that's the risk that essentially your project doesn't meet the expected commercial operation date. So your project is connected after the expected commercial operation date, and as such, there's a risk that there's a mismatch between your contract start date and the date as to when you actually start to receive generation from that project. So that's been a particularly prevalent risk in the UK due to the high degree of grid congestion that we've been facing as of kind of, you know, over the past few years. So that's I think, you know, there's been a number of really welcomed reforms over the past, you know, 1 or 2 months in order to better manage that risk. So primarily those reforms are aimed at um, prioritizing efficiency in managing the grid connection queue. So I think last year alone, there were over 1,700 applications to connect to the grid in the UK. So it was one of the longest in Europe, and there's essentially a bottleneck of projects waiting to be connected. So essentially, these new reforms are kind of being moving away from prioritizing those projects on a first come, first served basis to more prioritizing those projects with a higher probability of project realization and more of a strategic alignment to certain technologies. All really welcomed, and it's definitely, I think, going to make a positive impact. Is it going to be able to completely remove this risk for corporates or corporates and generators who are negotiating in CPPAs? I think that's kind of to be looked at, and there's probably a degree of investment in that's also needed. Uh, Sorry, I don't know why my um, apologies. Um, so yeah, it's certainly a risk. I mean, at least some of the PPAs that I've kind of negotiated in the past have, you know, we've been in one of the PPAs that we were negotiating, we were approaching our connection window, and kind of as we were doing that, I hope you can all see me. I think my camera's just gone off. There we go, it's back on. As we were approaching our connection window, you know, on the date that we were supposed to be connected, the engineers went to site and we saw that the copper cables had been stolen. So we missed our connection window, and the next available date was 8 months in the future. So that's obviously not great when your contract start date is much sooner than that. So certainly a relevant risk. I think one of the more recent risk that we've faced, particularly in the past 12 months, has been REMA. So we've been in this period of policy uncertainty, where I think the market is really divided on REMA and you know, whether or not we're going to move to zonal pricing. And I think because of that kind of division, it's meant that it's very difficult to kind of make a prediction on where policy is going to go. And because of that, it's been a headwind to CPP activity. And from our conversations, it's certainly been a concern for corporates as well as generators, and in some instances, it's slowed down that deal activity. So for us, it's not to say which side of the fence we sit on in terms of whether or not we think we should go to zone, or it's more if we do enter that space, how do we react, and what do we do? So very difficult to say exactly what's going to happen without policy actually being implemented, but there are some broad themes that we can take out, and I'm sure Victoria is going to touch on this because Pexapark has some wonderful data on these types of policy changes. But moving to a zonal pricing structure has the possibility to introduce basis risk into our corporate PPA. So that's essentially the risk where generation and consumption are located in different parts of the country. And so as a generator and a corporate, you may have different price exposures. Secondly to that, it also has the possibility to trigger change in law clauses, and that could reopen price negotiations. And then I think in the absence of grandfathering or various other kind of protection mechanisms, it does have the possibility to introduce locational risk. So for those generators who are located in very high resource, low consumption zones, there's a higher probability of negative pricing events. And if we look at how corporate PPAs have been negotiated over the past couple of years, that definitely has the possibility to push generators to share that risk with corporate. So it's very likely that corporate consumers will be absorbing some of that risk as they may be already. So the next part of my slides are typically talk about the price level, but again, Pexapark has some great data on this. So I thought what I would do is I just try kind of give some insight into how we experience negotiations, kind of being in the middle as a licensed electricity supplier, and just kind of taking both points of view from both the corporate and the generator, and combining that into what makes for a good negotiation, and what are some of the main sticking points in a corporate PPA. So I think first and foremost, we know that CPPA negotiations are quite long. So like I said, anywhere from 2 to 12 months. Now within that period, you're very busy. It's not like it's a slow process, but it's a busy period. And I think because of that, it's really important for you to set your timeline. So I think clear targets keep everyone on track. So do you have targets as to when you want to set when you want to agree credit limits or credit exposures, liquidated damages, sign your head of terms? All of these things, I think, keep both parties accountable, and make sure that everyone's moving on time to the signature date. Ideally, you want to sign your PPA at least a quarter before the contract start date. Secondly, and this is particularly true if you're signing a physical corporate PPA, but your licensed electricity supplier is essential to making that transaction work. So if you are doing a physical corporate PPA, it's not possible to do that without a licensed electricity supplier. A crude example, but literally moving the energy. So you need someone in the middle to move the energy from the point of generation to the point of consumption. So your supplier needs to sleeve that into your retail supply agreement. So I think because of that, because your supplier is needed to operationally facilitate the transaction, I think it's best not to keep them in the dark. So be transparent and involve them from the very beginning. I think the goal of your supplier should not be, to be involved in the negotiation and kind of, change any of your commercial terms, but the idea should be to commercially facilitate that. And in order to do that, it's really important that you bring them on right from the very beginning, and keep those communication lines open. And then kind of on that same point of supply is that every corporate PPA is unique. And I think because of that, you need a supplier who can accommodate your negotiated PPA. So your supplier needs to be flexible and dynamic. So, maybe I'm a bit biased. I think Drax does that quite well. I think there are only a handful of suppliers in the market who can really accommodate most PPA structures. So it's really important that, before even making a decision about whether you can do a corporate PPA, speak to your suppliers to what is their capabilities in kind of handling that type of transaction. And then, like I said, one of the biggest conversations about corporate PPAs is risk. So a question I get asked often is, what's the biggest negotiation point? And everyone thinks it's price. So the price is agreed right at the very beginning. So it's not necessarily something that gets negotiated throughout the contract. The biggest negotiation factor is risk. And for me, the best deal is one where everybody wins. So it's sharing that risk appropriately. We've seen transactions where corporates don't want any of the risk, and generators don't want any of the risk, and it's really difficult to facilitate that type of transaction. I think it's important to identify the risk at kind of, where it needs to be allocated. So whether it's at the point of generation and at the point of consumption, but ideally you need to take an approach where you want everybody to share that equally. Um, and another kind of component is that corporate PPAs are long negotiations. If the market significantly changes in that time, for example, if there's another war or pandemic or whatever it might be, it's very likely that your price level might adjust. So it's not uncommon for generators to change their price level midway through that negotiation, and it's not necessarily like the generators trying to kind of stab you out of any particular deal, but it can happen. So it's important that both parties accommodate that appropriately. And then lastly, I think, when talking to a lot of corporates about doing a PPA, um, it comes down to a financial decision, and obviously, as a corporate, you need to get kind of the most affordable deal that you can. I think it's important not to look at a corporate PPA um, as a type of transaction where you can reduce your energy costs. I think CPPAs in and of themselves are really an appropriate kind of transaction or risk mitigation technique rather than a price beating strategy. So looking at your corporate PPA, it's important not to look at, I mean, there have been kind of times when corporates look at the forward curves and they say, well, forward curves are 20, 30 pounds below where the CPPA market is. Maybe we're just going to wait a little bit and see if the CPPA market adjusts, or, why purchase a CPPA when the wholesale market is cheaper? So I think the idea is that corporate PPAs provide price certainty, they provide a hedge, and they provide a protection against volatility. And I think that price certainty has a premium, and that's why corporate PPAs tend to be a little bit more expensive than standard wholesale market transactions. And then just a little bit of a conversation about the future of corporate PPAs. So I think one of the most interesting components right now about the CPPA market is that we're actually seeing an entirely new generation of buyers enter into the market who are doing corporate PPAs for the very first time. So historically speaking, it was those larger tech guys who dominated the market. So Amazon, Microsoft, Google, a lot of those players have met their PPA targets and now they're rolling over their deals. So by them stepping back and out of the market, it's making space for an entirely new generation of buyers to enter into the market. Now, if we look at buyers like Amazon and who were the largest PPA buyer globally and still could be to this day, what those bigger buyers managed to do whilst they were dominating the CPPA market is they helped to create an element of standardization that I think is now being built into contracts. So having negotiated one of those contracts in one of my previous roles, those companies come to you with a contract already written out, they slap it on the table, and it's kind of a take it or leave it deal. And fair enough, because they are one of the largest buyers. It can be very frustrating being on the generator side because it's not even a negotiation, but there is a benefit to the wider market in transacting in that way, because you now have terms and clauses which the buyer is not negating on. So you have terms and clauses which are being replicated across multiple contracts, and those terms and clauses start to look the same. And so your contracts start to look the same, and both within the same region and across multiple regions. And that helps to create normalization. And I think because of that, this new generation of buyers, they're entering into the negotiation room, I think, with a better understanding of how risks are shared, as well as how the negotiation process is kind of managed. Another interesting aspect of what we're seeing is we're seeing more of a demand from corporate buyers to reduce contract lengths. So moving away from that kind of 10-year, 15-year tenor to now moving more towards a preference of a 3-year, 5-year, 8-year corporate PPA, because it's much easier to get those decisions, those procurement decisions approved, and it's obviously less of a hedging risk as well. I think what's interesting about this is that a lot of generators are starting to accommodate those types of PPAs, as long as the corporate is willing to sacrifice on additionality and rather utilize more operational projects. Interestingly enough, we're also seeing a demand for aggregation and bundling style corporate PPAs. So generally speaking, CPPAs have historically only been accessible to larger corporate buyers. Now you may have a situation where you have one project which supports 3 or 4 corporate buyers. It's not necessarily a structure that I think has been done repetitively enough for the wider market to kind of gain comfort in its feasibility, but it's certainly there are some mavericks who have already started doing this, and at least within the next 12 months, I think it's something that we're going to see more and more of, which is quite exciting, because it does open the market up to kind of new types of buyers. And then lastly, I think what's quite interesting is that as the UK's energy mix starts to change and evolve, the types of technologies to support that energy mix also start to change, as well as the types of contracts or power contracts as well. So, for example, as we start to introduce more flexible generation, PPAs start to adapt to introduce optimization. As we start to introduce technologies such as hydrogen, you need specialist types of corporate PPAs which accommodate kind of higher regulatory burdens. They may have different commercial exposures. All of this is quite interesting to see how the corporate PPA market evolves and adapts to certain kind of niches within its segment. And then lastly, because I wouldn't get away with this webinar if there wasn't just a bit of an introduction as to what Drax does. So we kind of offer like three main services within our corporate PPA line. First and foremost, we have a portfolio of renewable energy generators that kind of tops 800, 900 gigawatt hours across multiple technologies, spanning from operational to new builds all the way to 2030. If we have corporate customers who are looking for a PPA, we can provide like almost a private matching service where we allocate it or we find them a project which is suitable to their consumption needs. It's a private service just for our customers. And ultimately the goal is to choose high quality projects as well. The bread and butter of what Drax does is we provide sleeving. So whether one of our customers kind of goes out into the market and identifies a corporate PPA independently or utilizes our services to find one, doesn't really matter. Our goal is to sleeve that CPPA volume into their retail supply agreement, and we can do that through either baseload or pay as produce corporate PPA structures. And if we do the pay as produce structure, Drax also offers firming where we convert that variable as produce structure into a baseload shape, and we do that through 100% renewable sources as well. And then of course lastly, we also provide for our larger scale generators route to market services who may be involved in ROC or CFD schemes. So that's it from me. I think I've gone well over my allocated time, so I will leave it to Victoria. Thanks.
Sorry to interrupt just before Victoria comes on. I just wanted to say, if anything Callum said there that questions spring to mind, please use the question panel on the right hand side and get your questions in, and the same obviously for Victoria's presentation. Over to you, Victoria.
Thanks, Tim and Callum. That was really interesting. Hi, everyone. I guess I'll just do a quick introduction on myself. So my name is Victoria Santos, and I'm a PPA market and pricing analyst at Pexapark. For those of you who don't know about Pexapark, I'll do a quick intro as well. I won't go through all of these points, but I'll just highlight a couple of them. So we were established in 2017 with the idea to drive and provide price benchmarks and drive transparency in the PPA and BESS sector. And since then, we've been involved in over 35 gigawatts of PPA capacity that we've supported in deals, but also in a gigawatt of new BESS transactions. And we've also been continuously expanding with over 20 markets covered on our platform, where we aim to provide insights into PPA price developments, but also new regulatory developments as well. So let's have a look at the routes to market for GB, because I feel like to understand the PPA market in GB, it's really worth understanding what's going on, because the CFD does have quite a big hold on the market. So what this chart shows is the annual installed capacity of renewables in the GB market. So you can see here it's been growing relatively, especially since 2021 for solar and onshore wind. Solar's really propped up over the last couple of years. And then on the two lines on the chart, so that pink one shows the number of PPA capacity signed annually. So you can see that that's remained relatively stable over the last couple of years, with around a gigawatt of announced deals in GB. That's made GB hold its position as 5th largest European market, which is quite interesting in Europe. However, what we do see is that the CFD has really increased significantly over the last few years. 2023 was a bit of an exception. Obviously, that was with the AR5, where the CFD for offshore wind flopped a little because the prices were too low. But since then, the Labour government has really increased the funding pots for the CFD, and that's why there's been so much capacity contracted to try and meet their CP 2030 targets. As a result, the CFD really does exert its dominance in the GB market, and a lot of developers' expectations can be aligned with the CFD, as it's a really attractive route to market that a lot of people are quite successful in because of these bigger pots available for them. So with that in mind, let's have a look at 2025 so far in a little bit more detail into 2024. So Callum mentioned previously a bit of a slowdown in the market, and that is indeed what we're seeing in this year. So Q1 and Q2 are normally quite strong quarters for the market, but really you see that they've actually slowed down a little bit this year. Normally Q3 has a low anyway, because that's around where the CFD results are announced. So developers often wait to find out what's gone on, where prices were cleared at to set their expectations for their deals, and then you kind of see another spike in Q4. And this year, what we've seen is that actually Q1 and Q2 activity has remained quite subdued. And that's not to say that demand's dried up from the corporate side. I think that's really indicative because of this policy issues and uncertainty in prices. So prices expectations are quite high from developers, but also with so much uncertainty surrounding REMA, it's been difficult for both developers and buyers to sign long-term PPAs in the market. So I think that's also stopped the momentum quite a bit. In terms of deal activity, it's not too bad, especially in Q2. We've seen quite a few deals, but a lot of them are for smaller volumes. You can see them at the bottom of publicly announced deals. We've had 6. I believe there was one yesterday with TfL. But yeah, so that's all right at the moment, but it's we're seeing a lot more smaller deals, and some of them for on-site PPAs, for like new type of PPA structures, which is quite interesting. So, and the third interesting point, I guess, to mention here is that utilities have been completely driven out of the market, and any growth that we do see in GB that we've seen in the last 2 years of any kind of these steady lines that we're seeing has actually been completely pretty much from corporate demand, whereas utilities have dropped off from the market, and that's been mostly because of the kind of price expectations the CFD has brought about. And more corporates are willing to pay these kind of premiums for PPAs and to hedge their energy costs, but also we're seeing signs of that slowing a bit this year. I guess so. Let's now look back. Gone a bit too far. General trend of these deals. Just go back. There we go. So yeah, it's important to understand a little bit more about the general trends in these deals. So what the pink line here shows is the number of first-time corporate buyers in the market. I think Callum touched briefly on it. So we're seeing quite a lot of interest. So a lot of the new buyers that we see announced in the market are behind quite a few of the PPAs. So if you look at last year, it was around 14 new corporate buyers out of the 26 deals announced. So it's kind of on average, historically, it's been around 50% of corporate PPAs are first-time buyers. So they're really making a big impact in the market this year because activity has slowed down quite a bit, perhaps as well from those sophisticated buyers where pricing signals are and they don't want to commit to signing long-term PPAs with the policy uncertainty. This has been even bigger, so it's around 80% this year. With most new PPAs announced, they'll be from new buyers. And then I guess the second point in this one is that blue line where it shows the average deal capacity. So you're seeing that that's really kind of this year especially slowed, it's decreased quite a bit. This could be that, again, there's less deals announced and the ones that are for more like on-site PPAs and just smaller capacities in general, which is kind of setting the precedent in the market a little bit. So to understand who's behind the PPA market, we've picked out the top corporate buyers and the type of sectors that are signing PPAs in GB over 2024 and 2025. So the first thing to note is here at the bottom is that the last year it was consumer staples that actually were the largest sector to sign PPA deals in the market, kind of similar to what Callum said. A lot of the big techs have procured a lot of what they need through PPAs, so that kind of gave way for new market players to be the big, to take this crown a bit in GB. So Tesco's actually signed the most deals last year and even in 2025. So they've kind of, from the deals they signed, they're still holding on to the crown this year. They were driven a lot by their RE100 targets and their SBTI targets, which source 100% of renewable energy by 2030, which they claimed they've been doing since 2017. But last year they announced quite a few new PPAs, which because they've shifted their strategy from unbundled GOOs to get their targets, but to through direct PPAs. So you saw that the energy they source from PPAs gone up to 45%, and they actually have a target of 60% by 2030. So we can expect them to keep procuring. And it's not just been Tesco's in the supermarket realm. The Co-op and Sainsbury's also came out with some PPAs, and we can probably see some more consumer staples players making big announcements this year and next. So yeah, with consumer staples, we're talking about businesses who sell end products to consumers. So yeah, such as supermarkets or food distributors. And in second, it's no surprise again, Amazon, the largest off-taker in the whole of Europe. They announced a couple of deals, but actually they were really the ones driving any kind of activity from the IT services. We didn't see much from Microsoft. Well, we didn't see anything from Microsoft announced last year, whereas you did for the rest of Europe. So it's really given way to other new players such as utilities and other distributors and consumer staples, but also from educational sector, which is quite interesting. Manchester, and it would be cool to see other universities also signing PPAs. It seems here of tenders they're putting out in the market. So it's quite interesting to see how those are going to evolve. So I've mentioned a couple of times about how much the CFD market shapes the PPA market, and perhaps the most significant impact it has overall is on prices. And based on the clearing prices of CFD, this has really changed the landscape of the PPA market in GB. So to inform our prices, Pexapark collect data points from the market, including from actual transacted prices, but also from PPA bids of buyers, ranging from utilities to corporates. And we've also started getting bids from sellers of energy as well. This allows us to determine the transaction price levels and where expectations are in the market for both buyers and sellers. And where these expectations overlap is, in theory, where PPAs are signed. So based on the price evidence that we gather, we can see that the price expectations for sellers are really strongly aligned with CFD clearing price of PPAs. So you can see that for both solar and onshore wind. And obviously the CFD is index linked, so and for 15 years. So to have an equivalent of that at a 10-year price, we're talking around like £80 per megawatt hour, which is obviously quite high. But what we do see is there's a lot of diverging expectations for buyers. So they've got quite a big range that we do gather from the different buyers we sell. So on the right-hand side, I can go into a little bit more about the range that we see. So from the polling that we do, we see that utilities with quite large that have large price risk discounts into their prices, but also decreasing profile appetite for solar and onshore wind, especially as cannibalization has increased in the market. They're really in the bottom end of their range pricing. And as you go up onto the range, you get higher prices. You see that it's actually utilities who would sign back-to-back PPAs with corporates, and also some electricity intensive corporates that have quite a big, their bills made up quite a big from the energy demand that they have, and they're looking to hedge against volatile prices, but also have some kind of green agenda. And at the very top of the range, where we see these prices aren't necessarily like sophisticated buyers and people that are signing PPAs all the time, but it's corporates that are really willing to pay a green premium to source their energy for their green agenda. So they're the ones really pushing at the top end of the range and actually signing those PPA deals, are those first time buyers that are doing it a lot for their green agenda. So we see a roughly a price range from the buy side of around 35 to 40 for solar and onshore wind, which is quite a big range. So another key trend that's also influencing the PPA market is the prices in regos. They've really dropped. For long-term PPAs, the rego prices that we gather monthly, again from the price data points we collect, we've seen there's been quite a decrease for these ones. So the value that they're being attached has dropped down to low of like around 50 pence per megawatt hour, which is quite a significant change quarter on quarter. But also even compared to last year, it's a big drop where they were being priced at around £2 to £3. We're also seeing this for short-term rego prices in the current compliance period. They've got a downward trajectory in this year alone. They've already dropped by around like 62%. And this just reflects a broader drop in the perceived value of rego contracts. And what we're seeing is, with expectations from developers being of quite high prices, a lot of corporates are looking to just to focus on unbundled regos for some of their sustainability agenda procurement. And lastly, I guess I just wanted to focus a little bit on going beyond simple PPAs. Some new innovative structures that we're seeing. Callum briefly touched upon them. So PPA with zero price clauses, they're becoming pretty standard in the market now across Europe, and GB as well, with negative prices really showing their teeth on the impact it can have on developers, but also on the energy you're selling. So it's quite common to see zero price clauses and negotiating different structures for these to assign the risk between the developer and the off-taker. We're also seeing a lot of renewable plus storage, a lot of interest in them, not many announced. So GB's the biggest large-scale utility market at the moment for BESS, but we've not really seen many of these renewable plus storage contracts announced yet, but it'll be interesting to see how these develop so that you can shape the asset profile to the demand profile of the off-taker and how these will look like in the market. Also, another one that we're seeing a lot across Europe, but not any in GB at the moment, are mixed technology PPAs. So it'll be grouping maybe an asset profile that you might have to kind of add value to the energy you're selling, especially as cannibalization in these capture factors are also, like again, showing their impact onto the market. And I think Callum mentioned earlier, but multi-buyer PPAs, normally it will be for one asset and it can be a consortium of buyers and they'll get together where there's one larger corporate off-taker that can kind of handle the credit worthy, and they'll take on that credit worthy risk, and they'll go to join together. This will be especially interesting in GB as there's not many big industrial players to off-take a lot of demands. So where we get like smaller players coming together to sign one PPA, it'll be quite interesting. I think we had one last year for a consortium of hotel groups, and we're seeing a lot of them in Spain and Denmark as well, popping up across Europe, where it's like we see them from the health sector of like different pharmaceuticals, but also in like Denmark, it's been from even like a paintballing association. So you can really be creative with those. And then perhaps the holy grail of PPAs, and everyone's dream, is the 24/7 PPAs. There's certainly a lot of appetite for them, especially from the tech sector and corporates with a big green agenda. However, there's a lot of uncertainty at what these will look like, but we find that like where there's appetite, the market will start shaping towards trying to meet this appetite. So it'll be interesting to see how this pans out. And I guess a little plug for our podcast, which cover these and a lot more interesting topics as well in quite a lot of detail. So feel free to listen for more. And I guess that's everything from me. So with that, I can pass over to Tim for the next part.
You stay on, and we welcome Callum back as well, and keep your questions coming. So to kick off, what you were just saying actually about 24/7, does that mean you get rid of firming? You don't need to do firming if you had a 24/7 PPA.
So it's providing renewable energy all the time. I'm not entirely sure what's just to meet the demand. I think with the setup contractually, they're quite early days and there's not been any days announced, so it'd be having to look a bit further into those. But I'm not entirely sure if the firming aspect would go because you're still having to.
Sorry, go on. Yeah.
So I think for those for those 24/7 PPAs, the firming still exists, but there's a rego matching perspective, if I'm correct, Victoria, where it's almost those regos are retrospectively matched to all the energy that you receive. So and that's almost got really good 24/7 matching, kind of upwards of a kind of 90% rego matching rate. So essentially to say, here's your pay as produced PPA, here's your firming, which gives a base load shape, and there's all the regos which make up the entire generation that you've received.
So with regard to REMA and zonal pricing, will that put a real spanner in the works for PPAs, do you think, or how will it get around it? Victoria, I was thinking of, but Loki, you can answer that.
Yeah, I think we probably both have an opinion on that. So I don't know well, yeah, it would just certainly slow down with new PPAs. If it's already slow to discuss, it will probably create further layers in the discussion because it introduces new risks into those, such as like basis risk. So like if the off-taker and the seller sit in different price zones, which price do you settle at, and that kind of aspect to it. But also, I guess in new PPAs, it will have to open up a law change clause where prices can be revised as well. So it will certainly, be a bit of a spanner in the works, but obviously not make them completely unnegotiable. Like they'll still go forward. It would just be a lot more focus on certain parts of the contracts which perhaps were overlooked, such as like if when the lines are drawn out, which because REMA hasn't announced how the different zones would look like. So if they're going to be continuously reviewed, how would that look like in a PPA contract? It will add certain layers of difficulty to it as well. I don't know if you've got anything else to add to that, Callum.
Yeah, I think what's important to remember about REMA, I mean, REMA's been in discussion for a good few years now. We're getting to the point where a decision is going to be made. I think what's important for both corporates and generators to remember is that even if a decision about REMA is made this year, it could still take anywhere from 2 to 4 years before it actually comes into effect. So there is a period of adjustment, and it's not like it's going to all of a sudden tomorrow that the market's going to be split into zones. But indeed, any structural change, everybody's going to have to adapt to.
So we've got one here, question that says, what price mechanism do you typically see in a fixed price CPPA, e.g. fully fixed, index linked, CPI linked, non-commodity fixed, or pass-through?
From our end, I think the majority of quotes that we're seeing now is CPI linked. Yeah, Victoria's nodding her head.
Yeah, I think just it's a lot more common in GB, obviously because of the CFD that it is CPI linked. So it's kind of with the developers' expectations also that they are CPI linked, but it's understanding whether the buyer or not is willing to go for that.
So this one, what is the rule of thumb volume requirement to enter into a CPPA without aggregation? I believe NPower, for example, set the threshold at 50 gigawatts per annum, gigawatt hours, I should say.
I've certainly seen less than that. It really depends on the size of the project. So on the smaller end of I suppose what you would see is probably 15 megawatt, 20 megawatt type of project. So I don't know if, I mean, 50 gigs to me seems quite high. But again, it does depend on really what projects are available in the market and whether they can accommodate a smaller consumption size.
Any thoughts, Victoria?
I think especially this year, I don't think there's necessarily like a size limit. You see some like smaller ones. I think there was one signed for like a helicopter chain, and it's like for an on-site PPA where it was a much smaller project around like 4 megawatts. So really they do vary. And then if you have like a really large asset, it can go up to like 200, like anything really. So there's no like limit. It just depends on maybe the type of PPA. So if we're talking about those smaller ones, it'll probably be for on-site PPAs or like maybe rooftop structures that are like becoming a bit more common.
I think this comment was whilst you were speaking, Victoria. It says, do you see this trend continuing into AR7? Do you think the AR7 prices are going to be too high to make CPPAs attractive?
Guess it's a crystal ball kind of question. It depends what will
It is.
happen in AR7. Obviously, yeah, lots of ambitious targets. They've changed the structure of AR7 in terms of it will be like capacity, not money pots anymore. So it'll be interesting to see. But also, I guess it will be one of the last CFD rounds that will really contribute towards CP 2030. So, and there's quite a lot of projects who will be able to go into development. I think for offshore wind, the CFD prices will probably increase with the supply chain issues that they're facing, and things like that. The price will probably go up, but it's not 100% sure. Like, I guess it could go both ways for solar and onshore wind with how it will go. If price projects are really trying to get in and secure a CFD, it could be that it's a little bit more competitive for those, and you could see a bit of a drop in prices, or it could be that because they need to procure so much more energy, it depends how many people are going to enter. So it could be that more projects at higher prices are successful. So it really depends.
Mm-hmm. The short duration of fixed firming agreements versus the length of the asset offtake agreement limits the effectiveness of CPPAs as a price hedge. It's really a statement, but a question. But do you agree or not agree?
Yeah, I mean, whoever mentioned that, they are correct. It does. The reality is it's incredibly difficult for firming organizations to make any commitment beyond 3 or 4 years. There might be a couple out there who have the asset resource to provide that. So yes, agreed. It does. On the other hand, it could also work in your favor. For example, in 2 or 3 years, you get the opportunity to reprice, and if the market swung your way, it could be cheaper. But absolutely understand that it does reduce the effectiveness of the hedge, and maybe if more as more FlexGen is introduced into the UK, that might change, and the market might develop.
So how will flexible affect it?
It just changes. It depends on what your asset base is. So, for example, those organizations which have a lot of resource um, to gas facilities, or are able to offer longer hedging processes. But as more FlexGen is introduced into the system, you tend to stabilize the system, and you're likely to have lower capture rates. So it's really that element of capture rates in the future that poses a real risk to firming parties giving any kind of commitment. But if those capture rates are able to stabilize, then it's likely that risk starts to reduce, and so you can take longer firming clips.
Are Rego's value likely to be that low in the long term? They're going to stay low.
Again, I guess it like the market. It depends on the amount of renewables. So you've really seen in GB a lot of like more solar and onshore like record generation being fed into the grid. The prices, it's a bit harder. You see a bit of them picking up a little bit more, especially this month. Um, it's hard to say, but I think they won't go back to the previous highs that we saw like a couple of years ago. They'll probably stay a bit more subdued, but I reckon the market they'll prices will bounce back a little bit more.
I mean, are they essentially ignored now because people don't think they're worth anything, and sort of greenwashing type ideas? Or will that keep them depressed? I mean,
I don't think they're not necessarily ignored, because obviously for like a lot of these companies, if they've got RE 100 targets, if they've got SBTI, they need those to prove them. So I don't think necessarily they're ignored in terms of their own reporting standards and the reporting standards of the UK. They'll have value. It just depends, how many are issued, and if we're seeing like record prices, there could be more, depending on like what the targets are. It like depends on the demand for them. Obviously, there was a bit of a short back in 2023 why prices were so high, but I don't think that will happen again where there's that huge demand but not much supply. But I do think prices will recover quite a bit from the lows that they are now.
question about biomass PPAs demand versus solar and wind demand. Do you see multi-technology, including biomass as well? So there's two questions there. One, about biomass PPA demand versus solar and wind, and do you see them being included in multi-technology?
So I think demand for biomass PPAs is certainly there, but from different types of corporate buyers. For example, so hydrogen facilities have a real demand for biomass type of technologies because it offers kind of it offers flexible demand, right? So you can ramp up hydrogen production and ramp it down. And that's what biomass technology kind of offers. I think from corporate, like from your standard corporate buyers, like businesses, most of the demand sits in solar and wind. I think, again, the kind of recommendation that we would make, and this is also seen from wider market, and Victoria touched on this earlier, is to do a multi-technology PPA. So to combine a solar PPA with a wind PPA. So it's two PPAs. But by doing that, the primary difference in having different technologies ultimately has to do with the generation profile. So for example, while solar is very peaky, wind is more baseload. So by combining those two types of technologies, you have kind of a more natural baseload shape, and I think that reduces your volume variance as well as your weather risk, and that could ultimately kind of um, benefit your,
Are
not
these
reduce your
actually
firm.
done much currently?
Sorry, Tim?
Are they done much currently, multi-technology?
Yeah. From the majority of buyers that we deal with, it's multi-buyer PPAs. So doing two PPAs at the same time across solar and wind. And again, the demand for biomass PPAs primarily from like e-fuel corporate buyers, not so much from corporate consumers per se, like standard businesses.
Question here that says, what's the minimum contract length? I mean, I assume it varies, but you were saying, Victoria, they were getting a lot shorter than they used to be. Or maybe it was Callum, actually.
Yeah, I think that was Callum.
Yeah, I think we're seeing, I mean, look, historically speaking, 10 to 15 years, 3 or 5 years ago is what you would have seen with a good few 20-year corporate PPAs. It also depends on the buyer and how much of a hedge they want to take out. I think the majority of demand that we're seeing is for 5 to 8 year corporate PPAs. We've even seen 1 year PPA. We've done 1 year PPAs as well. So it is changing. I think the average at the moment is probably still in that 10-year mark. I think we're in the early days of seeing shorter term PPAs. So we'll see how it kind of progresses.
I encounter many smaller generators, it says, 200 kilowatts generation or less, wanting to sleeve power to neighbours a short distance away. Too far for a private wire. Traditional CPPAs suit much larger installation sizes than this. Are there more suitable CPPA mechanisms for these smaller size generators?
So the smallest PPA that we've done was 5 megawatt solar. So 200 kilowatts is I I mean, if I had to look at that off the top of my head, I would probably say it's too small for sleeving. Um, the best thing would probably be to be a spill contract. So to put whatever you're exporting under a standard export contract and just take a discount to SSP. Unfortunately, the cost of sleeving kind of outweigh the benefits that the smaller it gets.
Are there any CPPAs that don't require the corporate to guarantee a minimum offtake? I've heard of VPPA, where the offtaker believed there was no obligation on them to take a minimum volume. If this is genuine, are they widely available? So I assume V
Um,
is actual power purchase, is it?
yeah, if I'm honest, I haven't necessarily seen too many PPAs which don't have a minimum volume requirement. Again, if I'm honest, I can't say I really have. Even VPPAs have a minimum volume requirement, and the reason is the project needs a minimum amount of financing in order to sustain itself. So not something I've necessarily come across. I'm sure there's someone out there doing it, but not something I've seen. Victoria, I'm not sure if you have any insight there.
Yeah, same here. I think with that, the question they're asking, maybe they're a bit confused because I think the main part of the VPPAs is that it's not settled physically. Not necessarily, there's not the aspect that they were talking about.
A couple of questions on TPIs that I'll combine. It says, how do CPPAs and PPAs affect TPIs? And can TPIs procure CPPAs for clients?
Certainly, from our perspective, we welcome TPIs engaging with us, and if TPIs have customers looking for corporate PPAs, that's certainly something that we accommodate. I'd say the majority of our negotiations are done through TPIs. Actually, all of them are done through TPIs or PPA advisors rather than directly with the customers. So yeah, it's certainly, again, I think a lot of customers who are now tendering for new supply contracts, what we're seeing is that PPAs are becoming more of a standardized requirement, and so it's going to be more of a kind of I'm sure TPIs are going to become more involved in these types of transactions as we move forward.
This is a more of a philosophical one. Even with solar and wind combined, there's always some risk of power interruption. So no matter how many renewables we use, isn't a fossil fuel-based backup still necessary? What's your take on this?
I can't offer an opinion on that. Decline to comment.
Would the required electricity consumption be higher for multi-technology PPA as there are two generators involved?
Sorry, Tim,
No,
Would the required electricity consumption be higher for a multi-technology PPA as there are two generators involved? I assume not.
it's not necessarily two, so it'd be two generating assets, but they could be owned by the same company. And I guess it just again depends on the size of the assets and the project and how much the developer wants to sign. So it depends really.
Could you explain if there's a difference between a corporate PPA with a solar or wind turbine installation versus any other, and what are the current rates for PPAs in megawatt hours, which I think you actually covered?
Yeah, just to go over kind of again, I think the primary difference between corporate PPAs of different technologies is their generation profile. So, um, as a corporate, it's not only important to think about price, but also your consumption demands, and which technology kind of best suits that. So, again, I think solar and wind do offer slightly different prices. Victoria can definitely touch on this, but I would say solar is maybe £1 or £2 cheaper than wind. I'm not entirely too sure. But yeah, and generally the contract clauses within these PPAs, solar and wind, look very similar. I think the point about combining these two different types of technologies is that it normalizes the generation profile, and that could reduce your firming costs, but ultimately it better manages your weather as well as your capacity risks. And yeah, I think as Victoria mentioned, in terms of pricing, generally speaking, it's mid 70s, low 80s. It's benchmarked against CFD.
Are Drax able to facilitate P441 or potentially P442 benefits if it's in agreement with the generator?
If I'm honest, I'm not entirely sure what that means. We do have Drax is offering a kind of a peer-to-peer or license exempt program where if you're under 5 megawatts, you and the generator get to share in kind of those reduced costs. So certainly, if it's something you would like to explore, please reach out. I'll put you in contact
Well,
with
we
them.
are running out of time, so all these questions I will pass on to Victoria and Callum and see if I don't get to them all. So maybe just a final sort of question, Victoria. What do you think is there going to be enough demand for if everyone suddenly wants PPA? Can we transact them fast enough because they're quite small? I mean, 15 a year, things like that, or 50 a year. If suddenly 300 people want them, what's going to happen? Or can you not see it taking off like that?
Well, I think yeah, it depends. I think there's not that much, especially in GB, like large scale industrial, so that if they all decided to go, it could have been like maybe even those multi-buyer PPA deals.
Yeah, it's like an
I
aggregation.
think yeah, I think Callum said that like they're quite long to negotiate. There's a lot of layers, even though it's becoming a slight bit more standardized from market. There's still like a lot of intricacies in the PPA contract, and they do take a while. And if we're seeing that there is a big demand from the market, maybe we'll see a bit of a shift of some more developers looking to sign PPAs or wanting to sign, more of their projects towards PPAs rather than focusing on the CFD. So I guess it just depends on how
Whilst
that
we're,
will shape.
briefly looking at the future, there's obviously a price expectation difference between buyers and sellers, from what you were showing. And will that improve or will that get worse? Can you see in the short to medium term?
I guess it depends on the CFD. Like it really does hold quite a bit of an influence over the market. Developers' expectations will stay on that because they're successful. Like it's easy to be successful. So why sign a PPA for less if you can get, depending on what you can get on the CFD that's indexed, and obviously the government as the backer.
And Callum, I'll just finally finish with you and say, where do you see the CPPA market going over the next few years?
I think if we look at the government's 2030 net zero goals, that they are quite ambitious. So I think there is the sentiment that kind of as we approach like 2030, that the private sector is going to have an increasingly important role to play. Already there's been an announcement by government that they're doing a call for evidence to kind of improve the corporate PPA market within the UK, which is a really positive sign. So I think there's going to this stronger market signals, but I do think that's longer term. So likely I think as we approach 2030, there's likely to be a decoupling between the CFD and the corporate PPA market, because I think as it is, there's just a lot of friction and lack of pricing consensus between corporates and generators. I hope it doesn't kind of sustain itself. That could be more hope than opinion, but yeah, I do think that there's likely to be a really strong growth in demand for corporate PPAs as we approach 2030, when there's a massive push from both corporates and government to meet those net zero goals.
And one last thing, I was going to cut it there because we are running over, but this actually interests me. UK power prices are seen as uncompetitive versus Europe. Do you see the same in CPPA rates for UK versus Europe?
So the UK,
so UK power prices are seen as uncompetitive versus Europe. Do you see the same in CPPA rates for Europe versus UK? Are they higher in UK, basically? Also,
it just depends, I guess, on Europe. Obviously, it's huge, lots of different markets, and each market is so unique. With even GB, it's influenced by the CFD. Each market is like quite different. The CP, different markets, different prices. Spain, the price you'll get for Spain is completely different to the price you get in Italy. So I guess it just depends on which market you're talking about.
And the UK is fairly reasonable in the, like, not at the top of the bottom. Is it, where would it rank against other countries as an average?
In terms of like the CPPA price?
Yes, yeah. So, i.e., the impact on industry with regard to what they're paying for their CPPA.
Yeah, I guess it's one of the high, because there is that green premium for PPAs at the moment in the market. It's quite a bit higher, and it's, I guess, not as much of a green premium in other markets.
Mm-hmm.
So perhaps on the top end of the scale.
Okay, no. Well, thank you, Callum, and thank you, Victoria, so much. It's been really interesting, and thank you, everyone, for listening. Thank you. And by the way, the recording will be made available, and the slides on theenergist.com. Thank you. Bye bye.
Thanks so much. Bye, everyone.
Thank you. Bye.